Assalamualaikum everyone. I would like to introduce our topic is about trade and export of credit insurance and also consignment. Firstly, what is credit insurance? Let me explain a bit about credit insurance is the type of insurance available to trading firms that seeking to cover their receivable from credit losses. Trade credit insurance can offer a risk control mechanism to protect against non-payable of goods, invoice and other debts.
How trade credit insurance works? Trade credit insurance works by assuring the insurer against the failure of the company's client to pay, guaranteeing that the customer's invoice are paid according to the terms of the deal for the insurance year. For businesses of all kinds, it is used to protect both international and domestic trade. For an example, manufacturer A, which is the policyholder, supplies goods to company B, which is the customer, on credit with 30 days payment terms. Unfortunately, company B begins to get into financial difficulty with increasing bad debts and cash flow problems. With its ongoing monitoring of their policyholder's customer, the credit insurer is aware of company B's growing problems and at last resort alerts manufacturer A that cover will be withdrawn for company B. Company B becomes insolvent and is unable to pay its debts to those who have supplied goods on credit. Manufacturer A is able to claim on its insurance policy for goods supplied prior to cover being withdrawn in accordance with the policy terms and any excess that is deductible. In doing so, manufacturer A is able to continue trading, preventing the business from having significant bad debts that could have hit its ability to continue trading and pay its own suppliers. What risks trade credit insurance cover? Trade credit policy normally covers a buyer's portfolio and costs a negotiated amount of an invoices or receivable that stays outstanding owing to extended default, insolvency or bankruptcy. For purchase to the customer to be covered, policyholder must extend a credit cap to each of their purchases. The premium rate reflects the average default risk of purchases protected portfolio.
We move to the function of trade and export credit insurance. Trade and export credit insurance can protect losses due to non-payment commercial debt that happen to producer, traders and service provider. It also protects against the possibility of a foreign buyer failure to pay. It also an alternative to prepayment of cash on delivery items. Corporate companies also use it to secure their loose receivable accounts. It can protect the buyer portfolio and pays the invoice receivable that remains unpaid. The last thing is why credit insurance is important. Firstly, it can expand into new markets. Also improve revenues of companies with established clients. Credit insurance can unlock more powerful financing. It also transfers the burden of credit management. Lastly, trade and export credit insurance can identify tax benefits.
Let's move to consignment. What is consignment? Consignment is an act of consigning, an act of agreement where products are left to be sold to the third party but retain its legal ownership until the goods are sold. Consignor gets profit from goods in the form of commission. In addition, it did not involve with marts that purchase goods directly from wholesaler. Let's look to the examples of companies that do consignment. The companies that I chose are Carousel and eBay. Carousel is an app which is used by consumers for the purchase and selling new or second-handed products. It is headquartered in Singapore and has successfully operated in many countries such as Malaysia, Indonesia, Philippines and Canada. Next is eBay. eBay is an American multinational e-commerce firm that do transactions via website. It is headquartered in California and has become an online marketplace and shopping website that has a variety of products and services, and in fact, it is free to use. Next, let's look to the challenges in consignment. First, Consignor receive less profit compared to when they sell their goods directly to end user. Secondly, all unpurchased goods are returned to the consignee without any expense. Lastly, when doing consignment, goods cannot be properly marketed and may be visible by consignee. That's all from us. Thank you.